Hi, this is Jay Norris, author of Mastering the Currency Market. Welcome to the weekend edition of the report. Before we get to the charts, I need to remind you that trading futures and Forex is a risky endeavor and not suitable for all investors. The charts we're going to be looking at are courtesy of e-signal, and the patterns we see may not be replicated going forward. First market, we're looking at the Australian US dollar. You saw they did pretty good technical damage. You came back, you had a good-sized retracement. Later in the week here, Thursday it started to cover. Friday it really came back nicely to looks like it retested that weekly line. Overall, though, you did shift the weekly line lower there. You can see it on the weekly chart. So did some technical damage. I think that's significant because, as I said before, this is a big this is a big carry trade market. It's a real investment class market. Therefore, it has leading indicator aspect to it, similar to what we see in stocks and bonds even, because it has that big yield. So I would definitely be more concerned about this one than any of the others that you had actually closed lower on the week. I would take that as more significant than I would, say, the other markets, their performance this week. So you did shift the weekly lower. I think you're going to see a test of this monthly level here. That would be going down to the November low is there, so that's a very real possibility. I think it'd be a pretty good opportunity overall. I mean, longer term, I'd love to see a dip in this market. I think it's long term, it's a nice bull market, and nothing like buying a dip in a bull, that's for sure. Next market, the Euro US dollar. You continue to see upside here. It's pretty exciting, pretty good week to be day trading the euro, that's for sure. Friday, you had the bulk of that movement came during the European session, which is great. You're very close to resistance. You can see the November 2010 high there. That's our monthly directional line. You have that long-term bear trend line from that bear channel. And here we don't really need this bull trend line yet until it backs down. So you can see you're in a pretty good uptrend there. Weekly's up, daily's up. There may even be a little bit more upside to this guy. So, you broke out above 140 pretty nicely on Friday. You had a nice run there, but you have to wonder how much room is there left on this guy. And this market loves double tops too. The euro loves long-term double tops. A great example would be the mother here, the mother of double tops back in 2008. That was a sweet one. And you're putting in a potentially big one right now. So, hey, let's watch that. I would take more. I think there's more to take from an analyst standpoint that you end it lower on the week for the Aussie than there is that you close higher on the week for the euro. I think the euro is kind of a laggard here, but we'll have to see. Potentially big double top in the making here, so we'll be watching that. Pound US dollar. Pound continues to, you see the back and forth price action. This is our weekly chart of the pound. That to me, well, it's either two things. It's either consolidation before a continuation of the up move, which you have to keep an open mind, that's a possibility, or it's potentially distribution. And when I see it on this chart, I really think of that too, the distribution up, down, up, down, up. When you see that back and forth, potentially that's long-term investors coming out of the market, short-term investors replacing them in the market. But when I see up and down like that, I know it's either two things. It's consolidation or distribution. I was kind of leaning towards distribution, but in trading, you always have to have an open mind. Lose your opinion, not your money. Professional trader, they don't forecast markets. In this show, I just try to point out what's happening now because that's the most important thing. So that's why if you're sharp in this game, your analysis has to change as the market changes. You can see a little bit more room on the upside. Definitely had previous resistance here back in February, and then the beginning of March, and now it looks like they're trying to challenge it again. Again, I have to come back to the Aussie, and I think it's more serious that the Aussie ended the week down than it is that this guy ended the week up. The pound is not a leading indicator market as it once was. There's really no yield to it anymore. Same with the euro. So they're not asset class markets, and they're more prone to kind of tagging along. And when you saw that bubble burst in the yen, and we'll get to that next, you saw a lot of people just closing out positions. So I think that euro, it was a nice up move, and it was a good trending trade on the way up this week, and the pound, really good trending trade yesterday on the upside in London. However, I don't know how serious we can take that, given the euro. So I'm sorry, given the Aussie. So the Aussie, that's the one I'm keying off of here. And these guys, I think, are just kind of lagging, tagging along there. They're kind of getting whichever way the wind blows is the way that they're going. Dollar CAD, I think your overall price pattern says it all. Yes, you did shift the weekly though, and your daily's higher. Your daily looks like it's still higher. That's right, your weekly did shift higher, but your overall price pattern's pretty bearish. So I definitely need some more time on that one. What this market really needs is a higher low. The whole time you've had lower lows and lower highs. So you have to break that pattern before you can get bulled up at the least bit on this. Yes, I'll hand this to the bulls. You did shift the weekly, however, the price pattern is going to trump those directional lines in this case. You need a lower high, a higher low, and then a higher high, and you just have not had that in a long, long time. Here's the dollar chief. This guy's bubbling up. I actually focused on this in the live trading exercise on Friday in the U.S. session, and it just couldn't go anywhere. He had a little bit of upside to it. We were focusing on it because we thought maybe it was a decent counter trend trade coming off the bottom, and it just wasn't worth it. It went a little bit, but you couldn't have made any real money on it, and I was leery of it anyway. The only time I focus on a counter trend is if there's absolutely no trend trades for me, and it's Friday. Fridays are always tricky. Fridays are known for counter trending markets. So overall, though, you see the spike down here. I think that probably had much to do with the situation in Tokyo as it did actually fundamentals in Europe. A lot of the world in the Mideast in particular, well, some regimes in the Mideast, they don't like to keep their money in U.S. dollars anymore. So when you have terrible things happen, such as you had in Tokyo, the Swiss is really taken on a bigger burden for being the flight to quality currency. And you didn't have that in the past, so that's kind of a new phenomenon here in the last couple of years. And that's why you saw money running into the Swiss, and you saw weakness in this pair, dollar chief. To me, it almost looks like you're getting to that bubble stage. Not sure how much price-wise they're going to let that go before the G7 says, yeah, well, instead of selling our currencies and buying, instead of selling yen and buying our own currencies, we may have to help out the Swissies too in selling that currency. So it just doesn't. I don't see it paying from an investor standpoint when you have such a prolonged downtrend here, and it really has to be upsetting to the Swiss business people and the Swiss government that their currency is so darn expensive. How long are they going to tolerate that? Really, how long is the world going to let the Americans get away with this stealth weak dollar policy? It's great for American internationals, though, that's for sure. So I just don't think it pays to, I guess we need show some more room down below. But I don't know if it's going to pay, to hold positions down here, because you never know when you'll see central bankers come in and run that thing up a couple of hundred pips, and no one wants to get stung like that. Here's the yen. I think the bubble has burst here, and I think the other half of that is it could signal dollar strength. We'll have to see. Here's the weekly. You could see. Well, we could take off that. We had that 95 low at 80 mark, so we can move that down. And we're looking at a weekly chart of the yen. Dollar yen. You can see the weekly's still down. You're below the white line. Monthly's still down. but you have that big hammer now. And, you know, I think price and time-wise, you're very close to a bottom in this market. And I'll go out on a limb and say that if you are, that's probably going to herald in some kind of a dollar rally. And for currency traders, you know, intermediate moves are big ones. I mean, intermediate move in the currencies, you can make a living off of these. I mean, one of these, or one of these, well, there's a smaller one, and then certainly these, all these legs. I mean, really, you can make a career off of one of those if you hit it right and stay on it. So yen, very, very interesting now. I was not interested. You had these tiny little ranges. It just wasn't going anywhere. But now that they broke it lower, they ran all the shorts out of dollar yen there. It looked like all the retail and a lot of hedge funds just got decimated trying to hold positions there. Now that they're out of the way, perhaps you can get something going on the upside here. Hey, let's look at the stock market and we'll wrap it up. U.S. stocks had a tough week overall, given the terrible situation in Tokyo. Obviously, U.S. insurers have some serious liabilities over there. Here, we don't need that monthly line. But overall, you can see it came back. Also notice the trend to it. Hey, this is still a bull market. You're in a correction in a bull market. Will it get worse? Who knows? Could it get better? Well, odds are it probably could get better, given that it is a bull, and technically, it's not that serious of a correction, is it? I mean, here, let's look at that. I don't even think you did a 3.82%. I don't think you did a 38.2 yet even. So there you go. You can see it's just a modest correction, really. So you're still in a bull market in U.S. stocks, and that bodes well for Wall Street. I think at some point that'll kick through and that'll support your dollar too. Certainly the stealth weak dollar policy of the U.S. government, certainly however you want to call it, the weak dollar has definitely been a major benefit to U.S. internationals, and you're seeing that in the bull market here. Hey, thank you very much, everybody. My name is Jay Norris, and I want everyone to have a great, safe weekend. Oh, and here, of course, is our contest, too, to win the scholarship through TradingU. Go to trading-u.com/blog and register to win that $3,500 scholarship. We look forward to working with you. We look forward to working with the 3 winners there. Thank you very much, everyone, and we'll see you back here on Monday.